Hello guys, welcome to another exciting video from our channel. In this video today, we'll tell you about the most important ways in which you can make money if the crypto market crashes. But before we do, please bring your notepad and pen out and make sure you watch the video till the end. That said, come, let's begin. The crypto market is volatile and unpredictable. No one knows what's going to happen next. But if you research and then some do investing, then you might be saved from the mishaps of the market. So today in this video, we will be sharing some tips on how to make money despite the market crash. There are various ways for investors to profit if the crypto markets crash. Investors will have to decide for themselves which approaches are best. According to Charles Hayter, co-founder and CEO of digital currency platform, their choice will be based largely on their risk tolerance as well as where they feel the markets will go next. This video goes over 5 different strategies that investors can apply. 1. Purchase the dip. Purchasing a stock when it's on sale can result in a substantial profit. In practice though, pulling this off successfully may be more difficult said than done. To use this approach successfully, an investor must be able to time the market, which several market professionals have regarded as extremely difficult. Buying a dip in a crash can be tough, Yazan Barghouti, project lead at blockchain firm Gibral Networks, explained, because when do you know it has bottomed out? He pointed out that after peaking in 2013, Bitcoin values fell steadily for the next 2 years. The risks associated with this method were also discussed by Peter Zivskovsky, COO of Whale Club, a leveraged digital currency platform. He explained, quote, "Buying the dip only works in a general bull market. Buying the drop is pointless if the global trend reverses." Zivskovsky also cautioned traders against assuming that the value of Bitcoin will constantly climb. 2. Identify and capitalize on high potential opportunities. Investors should remember that even if the Bitcoin market as a whole collapses, some of these digital assets may fare well. Marshall Swat, the founder and CTO of Coinsetter, which was recently bought by Kraken, offered his thoughts on the matter. There will be firms and tokens that go on to be very successful, perhaps a future Amazon, he said, referring to the Nasdaq bubble. Investors should identify quality coins with teams you can trust to perform and weather the storm, according to Civic CEO Vinny Lingham, and then hold. Swat gave specific recommendations for analyzing tokens, recommending investors to seek out digital currencies with a strong base and a compelling business concept. 3. Cling to life for dear life. Holding on for dear life, as many in the industry call it, is one technique to survive a digital currency crisis. Essentially, this is purchasing cryptocurrencies and keeping them for an extended length of time, regardless of how much the value of the digital assets fluctuates. This method, according to Barghouti, is a classic and a lot of people will certainly utilize it if the market crashes. While holding in this manner is a reasonable approach, Zivskovsky advises investors to not only own the top 5 cryptocurrencies by market capitalization. 4. Using fiat currencies as an exit strategy. When crypto markets fail, some traders recommend converting to fiat money. When these digital assets fall in value, crypto asset management, for example, uses this strategy frequently, according to Tim Enneking, the firm's managing director. However, Swat cautioned that implementing this method properly may be more difficult than it appears. Exiting to fiat necessitates the ability to time the market, both when exiting and when returning, he said. The best technique is to set aside money you can't afford to lose and then adhere to your plan regardless of market fluctuations. 5. Bitcoin shorting. Shorting Bitcoin, which is an option offered by many exchanges, can generate very strong returns if done correctly. This feature is available on Bitfinex, Poloniex, and Kraken, according to Enneking. Shorting, on the other hand, is a technique for more experienced investors, according to Swat. He cautioned that this strategy is extremely dangerous. Investors should conduct their due diligence before implementing any method to profit from a market crash. Moreover, the attitude in cryptocurrency markets is increasingly being compared to the mania for dot-com businesses at the turn of the century as valuations approach new highs. Companies without a business strategy and with multi-million-dollar valuations went bankrupt when the frenzy subsided. According to Nolan Borrell, research director at CoinDesk, 90% of today's cryptocurrencies will not survive a market crisis. Those that survive will have the upper hand in the game, boosting earnings for early investment. However, identifying survivors in the cryptocurrency markets is more difficult than it appears. No single currency has achieved or is even close to reaching mainstream acceptance. Even Bitcoin, the most valuable and widely used cryptocurrency in the world, suffers from scalability challenges such as high transaction fees and slow networks. Fundamental issues are not reflected in current cryptocurrency prices, according to Jake Burkham, co-founder of CoinFund, a Brooklyn-based blockchain technology consultancy and investment firm. Berkman says, quote, "It's merely a wager that information and awareness will lead to adoption of such cryptocurrency. Forward-looking thoughts regarding decentralized networks," he claims, are reflected in cryptocurrency value. Christopher Gray, co-founder of enterprise software firm CapLinked, recommends 3 areas where investors should concentrate their efforts before investing in the asset class. The first is the founders and project team's experience. Although the world of cryptocurrencies and blockchains is still in its infancy, its roots may be found in well-established sectors. Ethereum smart contract tokens, for example, are utilized to link pieces within established sectors. As a result, prior experience is crucial. As investors should ask, how does what they've done before qualify them for this project? If a project team member has no crypto or blockchain experience, have they at least worked in the same industry? Gray wonders. Investors should read the terms of the deals as well. The amount raised and how much of it goes to investors are 2 crucial factors to consider in this regard. The traditional parameters used to evaluate equities do not apply in this case. This is because Bitcoin marketplaces are a reversal of traditional market assumptions in that founders may seek finance before establishing a sustainable client base or gaining success with their product. If someone wants to revolutionize the entire world of banking and only raises $5 million, there's a significant gap between what they want to do and how much money they're raising, Gray says, noting that the contrary is also true. In other words, the more focused a company is, the greater its chances are. Finally, investors should consider the technology. If it's just an idea, a white paper with nothing created, Gray explains, you'll be stuck solely trusting in the team, and if that's the case, it better be a really good team. How does a product work if a team built it? This assessment comes with a caveat. Cryptocurrencies, according to Burkham, are among the least attractive blockchain uses. We don't really have a clear handle on that, he says, referring to how cryptocurrencies might disrupt markets. The top 20 most traded cryptocurrencies are a smart place to start. If and when the cryptocurrency markets crash, it'll be quite straightforward to identify some notable survivors in this list. Bitcoin is the first cryptocurrency and is quickly gaining popularity as a store of value. Offshoots such as Litecoin and Bitcoin Cash were born from its blockchain and codebase. Both are vying to be the most popular cryptocurrency for everyday transactions. Ethereum's world of decentralized applications, or dApps, is quickly gaining traction, and it's responsible for a flood of tokens established on its platform, including Populous. Others, such as Dash, have taken similar claims and carved out niches in both emerging and developed markets, such as Zimbabwe and Spain. Neo has the potential to be a dark horse. It's geared towards the smart economy, and it's collaborating with the Chinese government to expand the country's cryptocurrency ecosystem. It has also collaborated with the Japanese Ministry of Economy and formed a strategic relationship with Microsoft China. Moving down the list, however, reveals cryptocurrencies that require a higher level of risk tolerance from investors. Tron, for example, a cryptocurrency that has lately risen in popularity, lacks a product and has an unskilled founder. Request Network, however, claims to represent the future of commerce, although that vision was recently shifted from one of an online money transfer aggregation service. The white paper for the cryptocurrency mentions a variety of applications for the coin, ranging from the Internet of Things to online payments and integrating business logic for government legislation. However, in terms of collaborations or experience in such sectors, the startup has very little to show. Well, there you go, guys. But don't take the market too easy. Make sure to do your own research on that token, coin, or anything that you're investing in. Make sure to have a backup plan and then invest wisely. That said, thanks for watching the video. If you found it informative, give it a thumbs up and share it with your fellow investors. And subscribe to our channel for more such exciting content and updates on your favorite cryptocurrencies. See you in the next video.